Now that we're in 2025, there is one strategy that if you use, you'll become profitable in this year. And if you don't use this, you will never ever touch profitability or even pass a funded account by yourself in your life. Okay, so you need to listen to this video carefully all the way until the end if you really want to change your reality and change the way you live your life. Right, so let's just get straight into it. The first thing you need to do is only trade within a London kill zone, which is from 7 a.m. until 11 a.m. on a 5-minute time frame. Okay, you need to mark out the highs and the lows of Asian session and identify which part of price is liquidated. Let me show you exactly what this means. So we're using Euro USD today, and what we need to do is mark out the highs. This is the highest point of Asian session and the lowest point of Asian session. Okay, you can see the blue area is Asian session because I do have a great indicator that I can send to you. Just comment down below and I'll send it straight to you. And also, what we need to do, mark out the highs and the lows. And now what we need to do is figure out which part of price actually gets liquidated first, okay? If it's the highs or the lows which get swept first. So if I play price forward now, you can see that the lows have completely been swept. And there's even more sweepage that's going down, right? So this is our liquidity sweep right here. Once we do actually get this liquidity sweep, now all we need to do from now on is actually find the breakers of structure where fractional highs / lows have been completely swept, and we can reinforce the market structure shift with an engulfing candlestick if possible, right? So what I'm going to be doing now is finding a breakage of structure towards the upside. Okay, it's going to be something like this. It's going to be a movement like this, where this will be the market structure shift, right? So it will be a movement like that, and this is the market structure shift. So all we need to do is really just play price forward now. All we're looking for is a fractional high breakage. If I keep playing it forward, you can see this would have been our fractional high breakage, but the candle before it and the candle after it does not go above it, and this candle didn't actually sweep it, which means this is not actually a market structure shift. So what we're going to be doing is playing price forward, keep going. We're going to keep going, and there we go. We just got a very good market structure shift. Okay, you can see right here, this is the candle right here that we actually are counting as the market structure shift, because the candle before it and the candle after it did not go above this one, which makes this the most recent fractional high. And if we actually mark this to this, you can see that this is easily our market structure shift, right? So once we do actually get a market structure shift, what we need to do from here on out is very simple, right? So we need to just identify a fair value gap, and then we overlap the fair value gap with a market structure shift for a high probability, and then we execute the trade, right? So all we need to do from here on out is find our fair value gap, and we can clearly see it. But just before that, if you own a prop firm account, I've got the biggest opportunity for you, okay? Because April is the best month for trading, and it's here with us now, and you can join us today in M's Pass, first link in the description, and get a payout, because this is what will happen. We'll cover 25% of any challenge cost that you choose. If you want to buy a 50k or 100k, we'll cover 25%. After that, we'll completely pass your account, phase 1 and phase 2. Also, we'll manage your account for 4 months after that. Yes, you heard that right, 4 months. You get to keep 70% of the profits. We only take 30%, okay? If we fail, you will get your payment back, and you will get $500 on top for just us wasting your time, right? So make sure you click the first link in the description. There's only 3 spots open for this offer for the rest of the month, so make sure you join as fast as possible, okay? So it's free management and free account passing, and we also cover 25% of your challenge cost, right? What better offer is there out there? And we're the best in the market. That's why we had 410 active people using our service. But anyway, let's get straight back into it. What we're going to be doing now is marking out our fair value gap, which should be from here to here. And once I actually do mark this fair value gap out, now what I need to do is very simple from here on out. I'm just going to put my buy limit right there, placing my stop loss just below the first candle of the FVG, which is this one, and placing my take profit at a 1 to 3 risk reward ratio, okay, or a 1 to 2.7, let's say, right? 1 to 2.7 risk reward ratio with a very good stop loss placement, right? So all we need to do from here on out is play price forward, and you're going to see exactly how it runs. So if I play it forward, you can see it's entered right there. It's going towards the downside. It's just bouncing off the fair value gap. There's so much buying pressure, which is going to push price all the way up, and you can see right there, price is looking now to take Asian sessions highs. So it's going to be doing this kind of movement, okay? So it's going to be going down, it's going to be bouncing off the fair value gap, and now it's going to go all the way back up, so we can actually smash Asian sessions highs, right? So we can smash Asian sessions highs and obviously take out the liquidity, right? So if I play price forward now, See how it goes towards the upside, and it's completely smashed our take profit already. But if we do actually keep it playing forward, you can see how it's gonna get so close to taking out the highs. Okay, it's got very, very close. It's basically taking out the highs, which means that this strategy completely works, and this would have been an easy 1 to 2.7 risk to reward ratio. Okay, I'm going to be showing you another example of this strategy, but this time I'm going to be showing you two things: a fundamental way of figuring out how to actually use this, and how to actually use fractional highs, right? So what you're going to be doing is letting Asian session do whatever it wants, anything it wants. But once it gets to the specific trading time, what you need to do is mark out the highest point, and you need to mark out the lowest point too, right? So once the highest point and the lowest point are marked out, here's what you need to do next: wait for price to actually take out one of these two areas. Let's say it took out the highs, and once it actually does take out the highs, what we need to do from here on out is very, very clear, right? Because we are trading a reversal with the strategy on Euro USD. Okay, so this is actually Euro USD. Let me just type this out. So we are trading this reversal on the Euro USD market, and now what we need to do next is find a breakage of structure, right? And we do need fractional lows. Let me show you exactly how to identify a fractional low, right? So you're going to be waiting for price to do this thing. Let's say it's gone back down. It'll go like this, right? So let me show you exactly how you can identify a fractional low. Let me just put this back in here. So a fractional low is going to be something like this, right? So it's going to be one candle. It's a normal candle, and then it's going to be another candle which actually overlaps with this one. It goes below it, and then you're going to have another candle that actually doesn't go more below it, and it just stays lower, right? So you can see the middle candle is at the lowest point, and once we have the middle candle the lowest out of the two, the one before and the one after, that means this is a fractional low, right? So we can mark this out as our fractional low right here. So this is the fractional low, and now we're just waiting for price to actually take this out. So now what price will do is go back down, do its thing, and now it will take out the fractional low, right? So once it actually takes out the fractional low, what we need to do from here on out is very simple. So this is taken out. This is the market structure shift from now. And once we do get the market structure shift, all we've got to do is mark out our fair value gap, which will overlap with the market structure shift like 90% of the time. And now all you've got to do is literally wait for price to actually go back into this area. Once it gets close or enters, that's when you enter your short position, placing your stop loss just at the first candle of the FVG, and placing your take profit as a 1 to 3 risk to reward ratio, right? Or 1 to 3 point, whatever. Okay, cool. So once we actually do all this, all we're going to be doing next is actually waiting for price to run up, go into the FVG area, and completely go up and smash our TP. This is exactly the structure that we used down below to completely dominate this price action market, which happened literally today, right? To completely dominate this and make all these profits. This move literally happened today. The silver bullet strategy happened today, and if you didn't catch it, then I don't know what to really tell you, but you'll get it next time, okay? So just watch the video over and over again, and make sure you actually do join my Telegram group, because we will completely change your life, okay? Because if I show you, right, you can see Jamie went from 0 to 50K in 4 months, right? He made $50,000 in 4 months. People be working whole years just to make 50K, right? And he's done it in 4 months. He went from $0 making nothing from trading to 50K, and you can do the exact same. Just join, first link in the description, because we have a crazy offer on right now, and I'll see you inside. But anyway, that's going to be the end of the video, and I'll see you in the next one. Take care.